Welcome back, everyone. A lot of dividend investors focus their attention on dividend yields and dividend growth rates, but few truly understand the power of reinvesting dividends. The long-term impact that dividend reinvestment can have on your portfolio can be an eye-opening experience, especially for newer investors that haven't had a chance to personally experience the magical effect of compounding. It probably takes a good decade or so to visually notice the role dividend reinvestment plays not only on your dividend income, but also on the market value of your portfolio. Fortunately for us, there are many decades of historical data we can look at to help us visualize and document just how exponential this growth can be. Today I'm going to show you the impact dividend reinvestment had on a small investment into realty income, one of my favorite REITs that happens to also pay a generous and growing monthly dividend. The company first went public in late 1994 and paid its first dividend in November of that year. The first dividend was 15 cents per share, but adjusted for stock splits, it equates to about 7.5 cents today. Most recently, Realty Income paid a monthly dividend of 24.85 cents, which is a cool 231% higher than its first dividend 28 years ago. If we hop into our financial time machine and start investing $100 each month into Realty Income, and we do this every month between November of 1994 and December of 2022, what type of dividend income would this investing journey produce? And more importantly, how would this income differ if we elect to reinvest dividends along the way? In the chart here, you can see the blue bars that show the annual dividend income without dividend reinvestment, and the green bars that show the annual dividend income with dividend reinvestment. Throughout the 90s, the difference is marginal, maybe $100 more per year. But in the early 2000s, this difference starts to grow larger, and it keeps growing with each additional year. By 2003, or roughly 9 years into this journey, dividend reinvestment would produce an annual dividend stream that is about 50% larger than without dividend reinvestment. By 2010, or 7 years later, the reinvested dividend stream doubles. And by 2021, or 11 years later, it triples. For me, seeing this is eye-opening, and it reinforces the importance of dividend reinvestment over a long period of time. To better define this difference, we can look at the actual dollar amounts. The impact of dividend reinvestment meant the difference of receiving a little more than $4,000 in dividends in 2022, or a little more than $14,000. That's a whopping $10,000 more. And if we look at the total dividends paid by Realty Income, the impact of dividend reinvestment is once again staggering. The blue bars that represent the total amount of dividends received during the last 28 years are growing nicely over time. There's even a slight indication of a minor exponential growth trend, as Realty Income continued to raise its dividend quarter after quarter. But the green bars that show the total amount of dividends received with dividend reinvestment turned on are growing much faster. In fact, you'd receive more than double the amount of dividends with dividend reinvestment turned on in this example. With dividend reinvestment, Realty Income would have paid a total of about $140,000 in dividends, and without dividend reinvestment, we would receive only about $59,000 in dividends. Of course, this also meant that you weren't able to spend these dividends along the way, which if you're retired is the major appeal of receiving dividend income. But if you're not retired yet, and you don't reinvest your dividends currently, I think you should consider starting. The cool thing about dividend reinvestment is that not only does it generate more dividend income for you, it can also grow the market value of your portfolio faster. In my $100 per month example, the market value of our Realty Income portfolio as of January 9, 2023 would be a little more than $100,000 without dividend reinvestment. Had we instead opted to redeploy our dividends into more shares of Realty Income, the final market value would be approximately $328,000, or 3 times larger. For context, investing $100 per month in this example amounted to a total investment of $33,900. So without dividend reinvestment, we would just about triple our money, and with dividend reinvestment, we would almost 10x our money. Granted, the portfolio without dividend reinvestment would also generate a passive dividend stream. If we tack the total amount of dividends received onto the final market value of the no-drip portfolio, we would finish with a valuation of roughly $160,000. While this cuts the impact of dividend reinvestment down a bit, not reinvesting dividends would still leave us with half the value of the drip strategy. 28 years may sound like a lifetime to some of you, and the final results produced by Realty Income may not look very appealing, but we should consider that investing $100 per month is not that much money, and I think many of us can and are investing larger amounts today. $100 per month is just $1,200 per year, or about $23 per week. If we can double this amount, the final market value and the amount of dividends received would also double in this example. It would take a $305 monthly investment to give you $1 million valuation with Realty Income if you started investing in the stock at inception and reinvested all dividends along the way. This investing schedule would generate about $430,000 in dividend income during this roughly 28-year period of time, with about $43,000 of this income paid to you in just 2022. If you chose not to reinvest your dividends, you would need a monthly contribution of $622 to generate the same results, inclusive of all dividends paid along the way. In this scenario, you would have received about $365,000 in dividends, with about $28,000 of that income coming in 2022. That same $622 monthly contribution, with dividend reinvestment turned on, would take your portfolio all the way to a $2 million valuation. And it would also generate $872,000 in dividend income along the way, with about $89,000 of that income paid in 2022. $305 per month is about $70 per week, whereas $622 per month is about $143 per week. These are not unattainable amounts to invest on a weekly basis. Some of you may not be there yet, and some are probably already investing more each week. Start where you can and add to it as your financial health improves. Every stock and fund will produce different results, but with realty income and a consistent monthly contribution, the outcome has been pretty clear. Dividend reinvestment doubled your final valuation if you invested consistently since 1994. After seeing the impact dividend reinvestment had on realty income in a portfolio that was funded with consistent monthly contributions, I wanted to see if the results were different for a one-time investment. And they are. Dividend reinvestment played an even bigger role on the final outcome of this scenario. A one-time $10,000 investment into realty income in November of 1994 would grow to about $85,700 today without dividend reinvestment. It would pay about $64,000 in dividends along the way, giving you a final valuation of about $149,000. With dividend reinvestment, your final valuation would be just about $498,000, and the total amount of dividends paid would be approximately $231,000. That's about 2.3 times more money in terms of market value, and 2.6 times more money in total dividends received. An even more staggering difference was the amount of dividends realty income paid in 2022 in this example. The no-drip investment would have paid us $3,828, while the drip investment would have paid us $21,764. That's about 4.7 times more money. The beauty of dividend reinvestment is that it offers staggering results and helps you compound your wealth faster. It is also a very easy function to turn on in your portfolio. Many brokers allow you to turn on a drip plan for the dividend stocks you invest in. You also have the smart fintech brokers that automatically invest any cash in your portfolio. So all you need to do is turn this function on and wait for the sweet rewards. During the past few years, investing, at least in the United States, has changed drastically. Nowadays, investors have options available to them that seemed unfeasible just a few years ago. One major change has been the introduction of trading fractional shares, which is essentially investing based on dollar amounts opposed to the number of shares. This development has created a new opportunity for dividend investors, giving them the flexibility of reinvesting their dividend income not only through the standard DRIP programs, but in a self-directed way into any stock or fund they choose. I was a huge fan of DRIP programs because they allowed me to redeploy my dividend income in a cost-efficient way, and this was probably true for any dividend investor with a smaller portfolio back in the day. The dividend income we would receive wasn't large enough to outright purchase whole shares of other dividend stocks, and even if it was, you still had to incur trading fees. So purchasing just one share of a stock was not a cost-efficient practice. I remember a time not so long ago where I would pool my money in zero-cost ETFs until I had $1,000 saved up, at which point I would invest that capital into a dividend stock for a fee of $4.95. Today, with zero commission trading and fractional shares, I am able to direct my dividend income into many of my holdings, and this can all take place instantly right after my dividends post to my account. All in all, I prefer the current structure of trading to the fee-based structure we had to endure a few years ago. But the one benefit of the old format was that trading, at least for most long-term dividend investors, was a less frequent action. Sometimes I would make as few as 10 to 12 trades per year. Today I often execute more trades in a single week. Having to make fewer trades meant that I had more time to research and really think hard about where I was going to invest my hard-earned money. While I can still follow the same practice today, there is an incentive to move faster, because if I reinvest my dividends as they are paid, they start generating more dividend income for me right away. I've wondered which strategy is better. To reinvest dividends back into the same stock that paid the dividend, or to put that money to work across several stocks that I think may achieve better results. I practice the latter, but I'm not overly convinced it is a better strategy. This is definitely something I want to test at some point in the future, but it is a complex process, and I'm not quite sure how to test it just yet. Anyhow, if you aren't reinvesting your dividends today, I hope this content will help change your mind. Even if you're already retired or living on your dividend income, reinvesting even a portion of your dividends can have exponential results in the future. I hope you found this content valuable. If you did, I would appreciate if you gave this video a like and subscribe to the channel. Thank you for watching and see you next time.